Fort Lauderdale has long been marketed as the Venice of America, a city of endless waterways, luxury yachts, and high-rise condos overlooking the Atlantic. For decades, it represented both the Florida dream and a thriving hub of real estate wealth. Developers sold visions of waterfront paradise, investors flocked in with all-cash offers, and new residents arrived daily, lured by sunshine, beaches, and the promise of prosperity. From the golden sands of Las Olas Beach to the glistening towers downtown, Fort Lauderdale became one of the hottest real estate markets in the state. By 2022, it wasn't just a vacation destination, it was a global magnet for wealth. Mansions sold in bidding wars, condos pre-sold before construction even broke ground, and international money poured into Broward County, convinced that prices could only climb higher. But in 2025, the story is no longer one of unstoppable growth. What was once Florida's most resilient luxury market has begun to unravel. Prices are slipping, sales are slowing, and the once unshakable confidence in Fort Lauderdale real estate has cracked. In neighborhoods that just 3 years ago saw homes fly off the market in days, sellers are now watching listings sit for months. Buyers are cautious, investors are pulling back, and families who stretched themselves thin at the peak are questioning whether they made the biggest financial mistake of their lives. The crash has sparked a wave of anxiety that ripples through open houses, condo board meetings, and waterfront communities alike. Fort Lauderdale's real estate dream, built on sunshine and certainty, now faces its harshest test in over a decade. The rise of Fort Lauderdale real estate, 2014 to 2022. To understand today's crash, you have to rewind to the boom. Between 2014 and 2022, Fort Lauderdale real estate experienced a surge unlike anything in its modern history. The greater Fort Lauderdale area, which includes Broward County, became one of the fastest-growing housing markets in Florida. The city's unique geography played a major role. With more than 300 miles of navigable waterways, Fort Lauderdale attracted yacht owners, retirees, and international elites who saw the waterfront lifestyle as unmatched anywhere in the United States. Developers raced to meet demand, launching high-rise luxury condos overlooking the ocean and sprawling mansions along canals where residents could dock their boats right outside their back doors. Prices skyrocketed. In 2014, the median home price in Fort Lauderdale hovered just under $250,000. By 2022, it had soared to nearly $500,000, effectively doubling in less than a decade. In the luxury segment, the growth was even more dramatic. Waterfront estates that once sold for $4 million fetched $8 million or more. Downtown condo towers like Auberge Beach Residences and Four Seasons Fort Lauderdale sold out units before construction finished, with international buyers paying premiums for prime addresses. Bidding wars became the norm. Realtors told stories of listings receiving 10, 20, even 30 offers in a matter of days. Homes routinely sold for tens of thousands over asking, sometimes even hundreds of thousands in the high-end market. For many buyers, speed was the only way to compete. Sight-unseen purchases and all-cash deals became commonplace. Investors fueled the fire. Hedge funds and corporate landlords bought single-family homes in bulk, converting them into rental properties. International investors, particularly from Latin America and Europe, viewed Fort Lauderdale as a stable place to park wealth compared to volatile economies abroad. Airbnb hosts also piled in, turning condos into short-term rental machines that promised double-digit annual returns. By 2020, the pandemic only accelerated the boom. Remote workers from northern states fled to Florida in search of bigger spaces, warmer weather, and fewer restrictions. Fort Lauderdale became a pandemic darling, with prices soaring nearly 30% between 2020 and 2022 alone. It felt unstoppable, a city where property values could only move in one direction, up, but beneath the glamour of waterfront living, cracks were already forming. Affordability was collapsing, insurance costs were rising, and the market was becoming dangerously overheated. Few wanted to acknowledge it at the time, but the seeds of today's crash were already planted. Affordability collapses beneath the boom. As Fort Lauderdale's real estate market soared, the dream of homeownership for ordinary families began slipping further out of reach. What was once a middle-class city with accessible waterfronts and suburban neighborhoods was now transforming into a playground for the wealthy. By 2022, the median household income in Broward County hovered around $65,000. Yet the median home price in Fort Lauderdale had surged past $500,000. That meant the typical family would have needed nearly 8 times their annual income to buy a home, a ratio considered dangerously unsustainable by housing economists. The affordability crisis wasn't limited to buying. Renters were also crushed by the boom. Between 2019 and 2022, average rent in Fort Lauderdale jumped by nearly 40%. A one-bedroom apartment that once rented for $1,500 per month now cost closer to $2,200, while waterfront luxury rentals commanded $5,000 to $10,000 monthly. For many lifelong residents, staying in the city meant sacrificing savings, delaying retirement, or working multiple jobs just to keep up. First-time buyers faced a particularly steep climb. With investors snatching up properties in cash, young families relying on mortgages struggled to compete. Stories circulated of 20-something couples making 10 offers in 6 months, only to lose out every time to out-of-state buyers with deeper pockets. For many, the Florida dream became an illusion. On top of that, hidden costs compounded the burden. Insurance premiums skyrocketed, particularly for waterfront homes vulnerable to flooding and hurricanes. In some cases, annual premiums doubled within just a few years, adding thousands of dollars to already massive housing bills. Property taxes followed suit, with rising home values pushing tax burdens to record highs. The result was a market built on shaky foundations. On paper, Fort Lauderdale looked like an unstoppable success story. But beneath the surface, ordinary families were being priced out while speculators inflated values to unsustainable levels. The warning signs were clear. When fewer and fewer people can afford to buy or rent, demand eventually weakens. And when demand slows in a city that had been fueled almost entirely by growth, cracks in the market quickly turn into fractures. The market turns, 2023 to 2025. After nearly a decade of nonstop growth, the tide began to shift. By early 2023, Fort Lauderdale's once red-hot real estate market started showing signs of exhaustion. At first, the changes were subtle. Homes that used to sell in days began lingering on the market for weeks. Bidding wars became rare, and price cuts, once unthinkable, started appearing on listings. Real estate agents who had thrived on fast deals suddenly found themselves hosting multiple open houses just to attract buyers. By mid-2024, the slowdown was undeniable. Sales volume across Broward County dropped sharply. According to local real estate data, the number of closed sales fell by nearly 25% compared to the previous year. Inventory, which had been scarce during the boom, started piling up. Buyers had more choices and sellers were no longer in control. Price corrections followed. Median home prices that had peaked at nearly $500,000 began sliding back toward the mid-$400,000. In the luxury market, the declines were even steeper. Waterfront estates that once attracted bidding wars sat unsold, with sellers slashing prices by millions just to draw attention. Some units in newly built condo towers were quietly discounted, as developers feared an oversupply in a market that was no longer frothing with speculative demand. The rental market also cooled. After years of relentless increases, rental growth slowed to a crawl. Some landlords who had banked on endless Airbnb income found themselves struggling with vacancies as short-term rental demand softened. New regulations in Broward County targeting vacation rentals only added to the pressure, forcing many to lower prices or shift units back to long-term leasing. Perhaps the most telling sign of the shift was the change in sentiment. For years, Fort Lauderdale homeowners believed prices could never fall. But as headlines about slowing sales spread and neighbors began whispering about price cuts, confidence cracked. Suddenly, sellers rushed to offload properties before values dropped further, creating a flood of new listings that pushed the market even deeper into correction. By 2025, the city once hailed as a real estate paradise was in full-blown slowdown. While not every neighborhood felt the pain equally, the overall trend was clear. Fort Lauderdale had gone from one of America's hottest markets to one of its most fragile. The impact on homeowners and investors. Behind every statistic are people caught in the middle of Fort Lauderdale's housing storm. For homeowners who bought at the peak, the slowdown has been nothing short of devastating. Take the story of Amanda and Carlos, a young couple who stretched their finances to buy a 3-bedroom home in 2022 for $750,000. They were told by friends, agents, and even family members that real estate always goes up. Fast forward to 2025, and similar homes on their street are selling for closer to $650,000. On paper, they've lost nearly $100,000 in value. Worse, their adjustable-rate mortgage reset last year, pushing their monthly payments hundreds of dollars higher. "We feel trapped," Carlos admitted. Selling would mean taking a huge loss, but staying means living paycheck to paycheck. Longtime residents face similar challenges. Retirees who counted on home equity to fund their golden years are finding those nest eggs smaller than expected. For some, downsizing has become difficult. Homes that once seemed like guaranteed assets are sitting unsold, forcing older residents to reconsider retirement timelines. Investors have also felt the sting. During the boom years, condo towers and vacation rentals were magnets for out-of-state money. Investors from New York, California, and even overseas bought in, confident that demand for Fort Lauderdale's sunshine and beaches would never fade. But now, many of those same investors are grappling with vacancies and rising carrying costs. Short-term rental operators, once flush with profits, face mounting pressure. Competition among Airbnbs has driven nightly rates down, while new county restrictions have tightened licensing requirements. What was once easy money is now a complicated, shrinking revenue stream. Some landlords have been forced to offload properties at reduced prices just to break even. Even high-end buyers haven't been spared. Luxury condos that promise double-digit returns in glossy brochures now linger on the market. Developers, eager to fill units, are offering incentives like free upgrades and waived maintenance fees. Yet even those perks haven't fully stopped the bleeding. In short, the dream has flipped. For years, Fort Lauderdale homeowners and investors felt unstoppable, riding a wave of appreciation that seemed to defy gravity. But when the tide turned, it revealed just how fragile that prosperity really was. And with more inventory coming online each month, the pressure on homeowners and investors alike continues to grow. Neighborhoods feeling the pain. The crash hasn't hit every part of Fort Lauderdale equally. Some neighborhoods have proven more resilient, while others have become ground zero for the downturn. Downtown Fort Lauderdale, once the epicenter of new development, has seen some of the sharpest corrections. Sleek, high-rise condos that were selling at record prices just a few years ago are now seeing discounts of 10 to 15%. Investors, who banked on endless streams of renters or buyers, are finding the pool of demand much shallower. Units that once had waiting lists now sit on the market for months, with sellers forced to slash asking prices. The luxury waterfront communities, places like Las Olas Isles and Harbor Beach, tell another story. Here, multi-million-dollar homes are struggling to attract buyers. A property that might have sold for $8 million in 2022 is now being quietly offered at $6.5 million, with no takers. These neighborhoods, long seen as the crown jewels of Fort Lauderdale real estate, have become symbols of the slowdown at the very top. In more suburban neighborhoods like Victoria Park and Coral Ridge, the downturn is playing out in a quieter but no less painful way. Families who bought during the frenzy are watching comps fall in real time. Open houses draw crowds of curious neighbors, but few serious offers. Realtors in these areas admit that the days of 20 offers in a weekend are long gone. Meanwhile, rental-heavy areas are also feeling the crunch. Parts of Fort Lauderdale that once thrived on Airbnb income are now seeing an oversupply of short-term rentals. With demand cooling, property owners are slashing nightly rates, which in turn drags down long-term rental prices as well. Entire blocks that were renovated for vacationers now sit half-empty, with frustrated landlords searching for any way to cover costs. Even Broward County suburbs connected to Fort Lauderdale, like Plantation, Davie, and Sunrise, aren't immune. These areas, which surged in popularity as buyers fled downtown prices, are now experiencing their own slowdown. With higher borrowing costs and fewer qualified buyers, homes linger on the market and sellers grow restless. Across every neighborhood, the story is the same. Fort Lauderdale's market no longer runs on endless growth. Whether you're in a high-rise condo, a luxury mansion, or a modest suburban home, the correction is reshaping the landscape. The city that once looked unstoppable is now learning that no market is immune from gravity. The ripple effects on Fort Lauderdale's economy. A housing crash doesn't just affect homeowners and investors, it sends shockwaves through the entire local economy. And in Fort Lauderdale, those tremors are being felt across industries that once thrived on the city's booming real estate. Realtors and brokers, the frontline players of the housing market, have seen their incomes shrink dramatically. During the boom years, commissions came easy. Homes sold in days, and bidding wars inflated final sale prices. Now, deals are harder to close. Realtors report spending weeks nurturing leads, only to watch buyers walk away at the last moment, spooked by high borrowing costs or falling prices. Many smaller brokerages have closed offices or laid off staff, unable to survive on the thinner margins of today's market. The construction industry, once buzzing with cranes and crews, is also slowing. Developers who race to break ground on new condo towers and housing projects are now pulling back. Some projects have been delayed indefinitely, while others are quietly canceled before shovels hit the dirt. Contractors and subcontractors, electricians, plumbers, roofers, framers, are feeling the pinch as the pipeline of new jobs dries up. Local businesses that thrived off new homeowners are also struggling. Furniture stores, home improvement retailers, landscapers, and renovation companies all depend on the churn of people moving into new spaces. With fewer sales closing, demand for these services has dipped. A Fort Lauderdale furniture retailer admitted, "Our sales are down 20% year over year. When people aren't moving, they're not buying." The ripple effects extend to tourism and hospitality too. Vacation rental slowdowns mean fewer visitors are staying in short-term properties, which translates into less spending at local restaurants, shops, and attractions. The trickle-down effect is real. When property owners make less, they spend less in the community. Even banks and credit unions are adjusting. Mortgage applications have slowed, and refinancing activity has dried up. Lenders are tightening standards, making it harder for marginal buyers to qualify, which in turn reduces transaction volume further. Fort Lauderdale, once a poster child for real estate-driven prosperity, now finds itself grappling with the opposite, a downturn that ripples through paychecks, storefronts, and entire industries. And while some businesses will adapt, others may not survive if the slump deepens. The housing market is not just about property values. It's the backbone of Fort Lauderdale's economic ecosystem. Developers and builders under pressure. Perhaps no group is feeling the sting of Fort Lauderdale's real estate crash more than developers and builders. For nearly a decade, they were the heroes of the boom, delivering shiny new condo towers, waterfront mansions, and luxury mixed-use projects that transformed the city skyline. But now, many of those same projects are teetering on shaky ground. In downtown Fort Lauderdale, several high-profile developments have been delayed or scaled back. Pre-construction condo sales, once snapped up in days by eager investors, are moving at a snail's pace. Units that would have sold out in weeks now take months to reach even half capacity. Developers are being forced to sweeten the deal with incentives like free parking spots, upgraded finishes, and even covering a year's worth of condo fees. Yet, despite these efforts, buyers remain cautious. Builders who rely on steady demand for single-family homes are also struggling. Rising costs for materials and labor have collided with falling sales prices, squeezing profit margins thin. Some projects that penciled out during the boom no longer make financial sense, leading builders to walk away before completion. In Broward County's suburbs, half-finished subdivisions have become a visible reminder of just how quickly momentum has shifted. Insurance and financing challenges are making matters worse. With higher interest rates, construction loans are more expensive and harder to secure. Lenders are less willing to bankroll large projects in a softening market, leaving developers stuck in limbo. At the same time, skyrocketing property insurance premiums in Florida have made buyers wary of committing to new construction. What once seemed like a safe bet now looks risky. Smaller builders are particularly vulnerable. While big developers may have the resources to ride out the downturn, mom-and-pop contractors often don't. Some have already gone under, leaving behind unpaid crews and unfinished projects. For workers in the construction trades, the slowdown has meant fewer jobs and more uncertainty. The glut of unsold condos has sparked growing fears of oversupply. Industry watchers warn that if Fort Lauderdale's demand doesn't recover quickly, the city could face years of excess inventory, dragging prices down even further. Developers who overbuilt during the frenzy are now scrambling to adjust, either by delaying launches or reimagining projects to appeal to a broader, more cautious buyer base. Once seen as the drivers of Fort Lauderdale's meteoric rise, developers and builders now find themselves on the front lines of its painful reset. And the decisions they make in the next few years will determine whether the city experiences a temporary correction or a drawn-out downturn. Expert opinions: crash or correction? With Fort Lauderdale's housing market in turmoil, the question on everyone's mind is the same. Is this a full-blown crash or just a painful but necessary correction? Experts across the board are weighing in, and their opinions reveal just how divided the outlook really is. On one side are the pessimists, who argue that the warning signs are too loud to ignore. They point to the steep run-up in prices during the past decade, which left Fort Lauderdale's housing market severely overvalued compared to local incomes. When the average household in Broward County needs to spend more than half of its income just to cover mortgage payments, affordability has reached a breaking point. Analysts in this camp warn that the market could see another 10 to 15% decline if interest rates remain elevated and investor demand continues to dry up. They also highlight structural risks unique to Florida. Soaring insurance premiums, hurricane exposure, and new building code requirements have added thousands of dollars to the annual cost of owning a home. For some buyers, those expenses are deal breakers, further shrinking the pool of qualified purchasers. One housing economist bluntly stated, "This is not just a cyclical downturn. These are long-term affordability challenges that could reshape Florida real estate for years to come." On the other hand, optimists argue that Fort Lauderdale's fundamentals remain strong enough to prevent a collapse. They point to Florida's growing population, fueled by both domestic migration and international arrivals. Fort Lauderdale continues to attract retirees, professionals, and foreign investors looking for lifestyle properties. And those long-term demographic shifts, they say, will support demand even in tougher times. Some analysts also note that today's market is different from the 2008 financial crisis. Back then, risky lending practices and a wave of foreclosures accelerated the crash. In contrast, most Fort Lauderdale homeowners today hold fixed-rate mortgages and built up significant equity during the boom. That cushion, they argue, will prevent the kind of mass sell-offs that defined the last housing bust. Still, even the optimists admit that the frenzy of double-digit annual price gains is over. The new reality, they say, is a slower, more cautious market where buyers have the upper hand and sellers must adjust expectations. This isn't a free-fall, one broker explained, but it's certainly not the runaway train it was in 2021. In the end, nearly all experts agree on one thing: Fort Lauderdale's market has entered a new phase. Whether it's labeled a crash or a correction, the days of effortless appreciation are gone. What comes next will depend not only on interest rates and economic conditions, but also on how quickly buyers and sellers adapt to this new reality. Fort Lauderdale's real estate market has always been a story of extremes. From breathtaking waterfront mansions to bustling condo towers, the city became a symbol of Florida's unstoppable growth. But just as quickly as fortunes were made, they are now being tested. Prices are slipping, sales are slowing, and confidence, once unshakable, is cracking. For homeowners, the crash has turned what felt like a dream into a test of endurance. For investors, it's a reminder that even the hottest markets have limits. And for the city itself, the downturn has exposed just how much Fort Lauderdale's economy depends on real estate. Yet, amid the turmoil, there are opportunities. Buyers who were once priced out now have leverage. Cash-rich investors can negotiate deals that were unimaginable only a few years ago. and those who can weather the storm may find themselves stronger when the market stabilizes. So, is Fort Lauderdale experiencing the beginning of a long decline, or simply a correction that clears the way for more sustainable growth? That answer is still unfolding. But one thing is certain: the era of endless appreciation is over, and the next chapter of Fort Lauderdale's real estate story will be written not in bidding wars, but in resilience.